Hello, today is January 30th, 2016. Let's go over my last call. I had a MEJT target of 1885.51. Fortunately, I have a standard rule that says if we gap sharply in the undesired direction, the call is dead from the open, and that's what happened here. As we'll see, I suspect we're not going to have to wait too long to get to that price at some time. There was a failed target from Wednesday, and that did print, and as typical, there was support under it. Sometimes there's resistance over it and support under it. MEJT says this last move is a false move and gives us a target of 1923.63, most likely to print Monday. That's pretty far under where we closed, so let's look at the evidence. The first bit of information is that this big rally came in response to the change in interest rates in Japan. There's a trading rule that says moves in response to news announcements tend to get reversed quickly and completely. If that rule works here, all of Friday's gains will be given back by Monday, or at the latest early Tuesday. We have some other not so nice things in this chart. When you gap up like this and wait this long to break through to new highs, it tends not to stick. We have a wall into the close, buy, no sell-offs of any kind. And finally, we have a Hobson close right at the top of the day's high. This tends to represent retail customers saying buy at any price. Close at the high of the day doesn't always lead to a sharp gap down, but it happens a very high percentage of the times. The bad news doesn't really stop there. Here's your stilt. Here's your stilt. Half a diamond's enough. Any one of these points can give us a target. If we take this one, we hit the target right on the nose. Here's a triangle. If you take the height of the triangle, use your standard Fibonacci ratios, you'll see we have a rally to, but not through the exact target. Here's a daily chart. There are all kinds of cycles at play here. 90 calendar days is one that Gann liked to talk about. He also liked the Gann fan, and if you exclude the last minute of furious orders to buy, we hit the 1x4 Gann fan line practically on the nose. The important thing here is we have a rally, we have a Trader Vic 2V low. If you take the initial rally, this is a retracement to, but not through, to 38.2% retracement level. That's a standard place to see a rally stop in a very weak market. Now, we had talked about the Fed whipsaw, and that gave us a target of 1948. We came within about 7 3/4 points of that. I have seen a few times when the rally stopped short. It tends to be a weak signal. So if we stop here, it's more signs of trouble brewing. If this count is correct, here's wave 1. That could be A, that could be B, and that could be C right here, giving us wave 2. Here's the diamond, half is enough. You see how the Fibonacci level gave us a relationship to the high. It's not hard to see that if you give the Fibonacci target of the low, You have a 61.8 retracement. Stops right in the middle of a fourth wave of lesser degree, right where it's supposed to stop. Where did the Fibonacci retracement? If this is wave 2, how low could we go? If wave 3 starts, could be a pretty ugly thing. Now let's come back. Well, here's your stilt. Here's your stilt. This big straight line down in the middle is typical of the middle of the diamond. Here's your diamond. You take the height of the diamond. The first target I have is 1702.77, and the next one is 1437. So we have a move up, which MEJT and some other stuff says is unsustainable. We have lower targets and a lot of resistance, both in time and price at today's high. If we can break through with a gap up, it's very strong. I think that's unlikely to happen. I think the most likely scenario is we gap down, probably strongly. I think we're going to see 1923.63, and it wouldn't take much for us to see a lot more than that, because if the wave count I showed is correct, we're going to be in wave 3 down for a major league tank, and that is today's call.